Hey everyone, Mortgage Nerd here. I want to talk to you today about a very important topic. It's your property taxes. We're in August, which means that in all the counties in Florida, you're receiving your trim notice. It's a letter you get in the mail, looks kind of like this. And what this shows you is the different columns with the value that you had last year as well as the taxes you paid last year versus what it could be this year. What do I mean? Let's put that back up for you. So you see these two columns to your right, those are two different proposals. One is if no budget change is adopted, and one is if the proposed budget is adopted. So if there's no budget change, you're going to pay less taxes. If there is a budget change, that what they proposed, you're going to pay more taxes. In this example, the taxes will actually go down from $73.42 a year to $71.64 a year if they don't take the proposal. But if they do, it goes up about $900 to $82.53. That's a pretty big chunk, almost $100 a month. So this time of year, it's very important for you to take a look at this and understand, know what's going to happen to your property taxes, especially if you purchased your property last year in 2022, because you may have purchased it from someone that's owned their house for many years. They had Save Our Homes Amendment, which means that their property values only went up 3% a year, tax value, that is the value on the trim notice. And because they were kept from rising quickly, they had a much lower tax to pay than what you're getting now this year. Doesn't seem very fair, but that's how it works. This example I'm showing you right here is actually a property of mine that I purchased in 2021. So the taxes were about $4,000 a year. As you can see, last year it went up to $7,300. I got hit huge, hard with taxes. My payment went up a lot at the beginning of this year because what they have to do is last November, they paid the tax shortage, and then they also had to save for the taxes this November. Therefore, my taxes, instead of going up about $300 a month, because that's what that difference is, it went up $600 a month. Well, good news is now at the end of this year, they're going to do another escrow analysis and they're going to bring my escrows down. So I'm going to pay less money next year. I understand this because it's my business. I prepared for this. A lot of people aren't prepared for this. I always prepare my clients. They don't even remember all the time. I have friends of mine a year or two later, like, Phil, what is going on? Look, I explained it to you. You probably don't remember because we went over a lot of things, but this is what it is. So make sure you're planning for it, because in November the taxes are paid, and around January is when the lenders do their escrow analysis for your escrow payments. Mortgage Nerd out.